Cash is king for small business owners, so it's not surprising that cash flow issues are a major concern. Small business owners need to get paid quickly, but that's not often the case. Some are notorious for sending out invoices late and chasing past due accounts months later. Others who are diligently sending out invoices each month still aren't getting paid quick enough. The good news, it doesn't have to be that way. I'm Donna Fuscaldo. I'm a senior finance writer at business.com. Today, we're speaking with Dawn Brolin. She's a CPA, and she's here to tell us how to optimize our invoices so we can get paid quicker. Hey, Dawn, thanks so much for taking out the time today.
Oh, Donna, thank you so much for inviting me. I'm thrilled to be here.
Great. So the invoice, small business owners known for sending them out late, chasing payments, even the ones who are sending them regularly aren't getting paid. What's wrong? What is going on?
I think people have to start paying attention to a bunch of things that are just present on the invoice, right? So, simple things that people don't pay attention to are terms. So having terms with your vendors, knowing, can you get a 2% discount if it's within 10 days, and paying attention to that. That can be, if that's a $10,000 invoice, we're talking a significant amount of money. Although, Donna, as you would know, if you saw $1 in the parking lot, you and I would probably fist fight for it. But still, a dollar is a dollar is a dollar for a small business owner. So, paying attention to those terms and even reaching out to your vendor and negotiating. If you don't have terms, giving you 30 days, even just a net 30, that helps you manage your cash flow. I think that's really important.
Why is it that small businesses don't think about the invoice? I know they're so worried getting the business, billing them, and then they just forget about it. What are they doing wrong?
I think really at the end of the day, sometimes, especially small business owners, they have a tough time sometimes of delegating and realizing that it is okay to hand over certain aspects of your business that aren't really making you money, but rather, an administrative workflow. Certainly integrating an application, grabbing an application that will actually scan and read the invoices and help maybe automate the process a little better, as opposed to that manual read, which is, I think, one of the great things about technology is, OCR and reading those invoices automatically. The computer will handle that for you and can actually give you some great insights as to your cash flow, money coming in and money going out, really paying attention to that.
When we talk about these automated systems, what are they flagging, or what are the things, the top components of your invoice that you should be looking at that these computer systems are doing for you?
Absolutely. One of the biggest things, and I'm a certified fraud examiner, so I'm always looking out for fraud, right? Well, the vendor list. So an invoice may come in on a vendor that may be a fake vendor, where a human person may just look at it, enter it into the system, and move on. With an automated system, it will automatically detect whether that vendor is in the existing vendor list or if it's a new vendor. So that can help minimize the risk of fraud. And a couple of other ideas certainly are, the dates and the timing, the human person to say, hey, if I type in the wrong date, now we may have an issue where we end up with late fees or penalties. And so we're definitely finding that out. There's one other thing that I want to just mention real quick, and that is sales tax. So if you're purchasing items, you're purchasing things, let's say you go to Staples and you buy a notebook or whatever, and so you have that expense and there's no sales tax that's been charged on it for whatever reason, you're responsible to remit that, what they call use tax. And so if you're not paying attention to what's happening, maybe you have other people purchasing on your behalf. If you're not paying attention whether sales tax is paid or not, we can have some significant penalties and interest there.
Oh, that's really interesting. Just a little bit on the vendor fraud. Is that a big deal with small business owners? And is it something they should be looking out for, these fake invoices coming in?
Yes, absolutely. There could be, again, if you have multiple people doing orders, most certainly you better have a purchase order system, so that the person who's handling the accounts payable can match a PO with an invoice. Because without that backup, we don't know where the items were shipped. We don't know, who was the person that ordered the products. And so we do find that, according to the Association of Certified Fraud Examiners, they do something called the Report to the Nations. And it's all around business fraud, occupational fraud, and accounts payable fraud is a huge component when it comes to fraud in small businesses.
So now, if you're a small business owner we're going to flip it a little bit. You're trying to get paid from your customers. What should you have on your invoice, or how do you optimize it to make sure you're getting paid?
right? Certainly your terms. So, right, I try to teach our small businesses, your customers work with you, right? So you set your policies and procedures as to how you're going to get paid. For instance, you have contractors who, will put out an invoice, or they'll go and agree, have a plumber, for instance, they'll go agree to do the job, they go do the job, they don't get half of it up front, they get no deposit on account, and then they're standing there waiting 60 to 90 days to get paid. They've put costs up front. So we try to say, hey, listen, if you're a contractor, you need to be getting money up front. And as you finish the job, at certain points, you should continue to get paid so that you're not standing at the end without money, making sure you have a contract, those kind of things. But certainly it's your terms on your invoice and the way you want to get paid. And so as a small business owner, cash is king. Without cash, you are out of business. So you've got to make that a priority. And again, you set that stage with your customer and with your client. That's the most important thing.
If you do have a customer that's not paying you, how aggressive do you become without risking like ruining the relationship? And then is there ever a point where you look for help outside of your own collections department?
Yes, absolutely. So there are many attorneys, there are companies that will buy your accounts receivable and give you a percentage based on that. But to me, what is it? Medicine is the best prevention, or what is it? Best prevention. So I forget what the saying is, but you know what I'm trying to say. Prevention is the best medicine. Maybe that's what it is. So if you think about it, if you set those terms and make sure that your customers behave and comply with your terms and the way you want to be paid, you won't have those issues. But should you run into those types of situations, there are attorneys that will do collections for you. If you're a contractor and you have an actual contract with your customer, you can put a lien on their property. If you're working on a property, so there's different ways like that if you do end up in a dispute or an issue with payment, you can seek alternative measures. You may get pennies on the dollar, but it's better than getting nothing. So that's why the prevention is the best medicine.
In terms of the ideal payment window, should it be 10 days? Should it be 30? Or should it be further out, and discounts? Is that a good way to get people to pay?
Yeah, I think people do enjoy discounts for obvious reasons. You have a significant invoice, you want to pay a little bit less, you're willing to do that if you pay within 10 days. That's definitely a good idea. It depends a lot on your industry. So for service providers, I'll use an accounting firm because that's what I am. As an accounting firm, our product, let's say, is our tax returns or our reports that we're generating, whatever that may be. So I won't release that information until I'm paid. If I've done the work, I want to get paid, and then I'm happy to release the tax return and e-file it. That's easy for a service-based business, taking money up front, putting people on contracts where it's paid the first of the month. It's like they're prepaying, but the best part about that for you as the business owner, you're guaranteed to be paid. If they don't pay you on the first, you don't perform the work for that month. And so those kind of terms are a little bit easier on the service side. But when you come to retail, obviously with retail, you pay, you don't leave without your stuff. I mean, people don't leave grocery stores with bags and not pay, right? So that's kind of fun. But you do have those other industry types that have, like contractors are probably the biggest one. And so those guys have got to rein in how they're going to determine their pricing and how they're going to determine when they get paid.
Great. And then finally, if you are offering discounts to entice them to pay early, how do you make sure it doesn't eat away at too much of your profit? Is there a formula?
Well, really, at the end of the day, you've got to be paying attention to your reports. I tell a lot of business owners, I understand that we're doing your bookkeeping, or we have an outsourced product that somebody else does the bookkeeping. It's great that we're getting your books done. It's not meant to be a tax return. Okay, so it's like you've got to analyze and look at your reports. Look at your accounts receivable. We call it AR turnover. So there's some what we call KPIs, right, that tell us, hey, listen, you're not collecting your receivables for sometimes 45, 60 days. We're constantly looking at your balance sheet and looking at your cash position, and it's not a great cash position. That's because we're having an issue with collections, or we're not balancing our accounts receivable with our accounts payable. And so really, it is not really a formula, but rather, it's a formula if you want to look at a ratio, right? Is to pay attention to those ratios and pay attention to those reports, because the bookkeeping is useless. Doing write-up work is useless if you're not looking at your reports. And that's where you're going to find the secrets to your business and what's going on.
Great. So one more question for you. The pandemic, cases are rising again. There's concerns that the economy is slowing. I think retail sales were less than expected this morning. for small business owners, is invoicing and getting it right even more important? Or do you need to have more leeway if your customers are struggling?
And it's such a really hard balance. And I just have to say, as the small business owner, you have to really pay attention. If you're let's say retail, right? What is selling and what is not selling? And so in your inventory reports and your sales reports, you should be able to identify over even the last year, which is, you've got a whole year's worth of data, honestly, to look back and say, hey, what sold and what didn't sell? What's sitting on my shelves today that is dead weight? I've got to blow those out, get the sales out now, and then make sure you're focusing on those key items, those key things that you are selling successfully, and focus on that. And I think that that's, if you can look back and see what worked and what didn't work and take that time, that's the key. You've got to invest some time to take the time to see what is working in sales in my company and what is not. And just go off of that tone, and then continue to analyze as you go what's selling and what's not selling.
Great. It's good that they have comparables this time around, I guess.
Unfortunately.
So I want to, this was awesome. I want to thank you so much for taking out the time. I feel like our listeners are going to have so much actionable information.
Awesome. That's what I'm here for, Donna. My pleasure. Anytime. I'm all yours.